So what is a 4% rule in investment and finance? Okay, so it's a measure how secure your investments and your financial stability is. It will tell you if you withdraw 4% of your investments every year, year after year, you will never ever run out of your money. Simple example, let's say you have 2 crores in your investment portfolio and you withdraw 4%, which is around 8 lakhs in a year, and a monthly might be around 65,000, and the remaining invested amount keep on getting the interest wherever you have invested, FD, mutual funds, wherever. So you will never ever run out of the money. If you have 1 crore giving you interest year after year and you withdraw 4% from that 1 crore, which will be approximately 4 lakhs per month, it will be 34,000. So you will never run out of that money, and you can safely be assured that my retirement portfolio is safe and I will continue to withdraw the 4%. So always remember, it is very safe to assume my return on investment will be 4% post tax. Okay, I have 1 crore, I will get 4% post tax. I have 2 crores, I will get 4%. It's a very good measure to calculate how much return you will get from your investment, and be conservative. It could be more, but let's assume only 4% so that we know our retirement portfolio will never get finished. All the best, guys. I will see you in my next video. Keep investing. Let us stay connected.